Taxes are the biggest expense that you'll ever pay in your lifetime. And this is one secret that the super wealthy and the super rich know and are not willing to share with the rest of us. And this is the main reason why someone like Elon Musk refused to get paid a salary at Tesla and instead opted for stock-based compensation and performance-based compensation. This is because it allowed him to legally avoid taxes. In this video, I'm going to be sharing ways in which you can also learn how to reduce your tax obligations and legally avoid taxes. Let's get right into it. Whenever we are talking about money, savings, and investments, we try to make sure that our money beats the following things, or we try to make sure that we beat the following things. Number one is what we call the inflation rate. This is just the average increase in the price of goods and services. Then number two is what we try to protect our money from, what we call the currency risk. So maybe this because for someone who's living in Kenya, a Kenyan shilling isn't as stable as maybe other superior currencies, like maybe the US dollar, or even maybe a better alternative like Bitcoin, which maybe is posed to replace the US dollar. Then number three, we try to reduce our investment costs. And then number four, we also maybe try to make sure that we return, or maybe our portfolios or our savings and investments return a return that is superior than the inflation rate, so that we can maybe maintain our purchasing power and then also ensure that our wealth is compounding at a decent rate. But then I will say that maybe there are levels to which we worry about different things, because if you look at the average investor, those are the things that maybe we're trying to worry about. We're trying to worry about inflation, currency risk, the rate of return on our portfolios every year, and then maybe also worry about the investment cost and if they are minimal enough to not impact our long-term growth of assets. But then if you look at the grand scheme of things, maybe the biggest thing that you should always be worried about is the taxes that we pay. Because if you look at our tax brackets here in Kenya, the average person is paying between 25% to maybe 35% of their base income to taxes. And you're going to have that obligation to pay 25% to 35% of your income, depending on the income level, for the rest of your life. So depending on what you earn or how much you earn, 30% is not yours. It actually goes away into taxes. And this is one thing the super rich have actually realized, and for them, they have now maybe tried to up their game. They're not trying to build the inflation rate, maybe the currency risk, maybe the investment cost, and maybe just register a good return that beats the inflation rate and maintains their purchasing power. They're trying to learn how they can actually beat something like taxes, because maybe taxes is the biggest obligation. More so for the super wealthy, you're going to actually be paying a lot of money in taxes. So if you don't learn how to reduce your tax burden, you'll find that actually you're falling short, because your main challenge that you're up against is actually taxes, because the super rich have the highest taxes, and actually one of the easiest income to tax is what we call your salary. So a salary is very easy to tax, and is actually one of the highest taxed incomes. I'm going to be giving you two stories about two people and how they have been able to navigate their taxes and reduce their tax obligations and actually earn more money from their investments than from their active income. So we're going to look at Warren Buffett, and then going to look at James Mwangi, who is the CEO of Equity Group. Let's start with the story of Dr. James Mwangi, who is the CEO of Equity Group. So in 2023, Equity Group declared a dividend of 4 shillings per share, and James Mwangi actually owns 3.4% of Equity Group as of 2023 shareholders registry. In 2024, he earned a total of 685 million shillings from his dividend income, as he owns 3.4% of Equity Group. And remember, dividends in Kenya are only taxed at 5% withholding tax. This means he only paid 34.3 million shillings in taxes from his Equity Group shareholding after earning 685 million shillings from his ownership of Equity Group. Now compare this to his annual salary, whereby he was paid a total of 213 million shillings for the whole of 2023 as his salary as being the CEO of Equity Group. Now remember, he's a high income earner, and he was subjected to a withholding tax bracket of 35%, meaning that he paid 74.5 million in taxes. So you can compare the two incomes. He earned 685 million shillings from his dividend income and earned 213 million shillings from his salary, but then he paid a higher tax from his salary than what he paid from his dividend income. So that is one of the example of the way that maybe Dr. James Mwangi was able to avoid taxes, maybe reduce his tax obligations, because even though he earned more in dividend income than his salary, he still paid more in taxes from his salary than his dividend income because of the differences in the tax bracket. The second example is from Warren Buffett, where you'll find that Warren Buffett's secretary actually pays a higher tax rate than Warren Buffett, despite the huge difference in their wealth. So Warren Buffett's main tax obligation is from capital gains, whereby maybe he sells some of the stocks that he owns, and that is capped at 20%, but then his secretary, his main source of income is his maybe his salary, which is capped at 37% taxes. That's another example whereby you'll find that maybe Warren Buffett pays a lower rate in taxes compared to his salary, despite the huge difference in their wealth or maybe in their income, because maybe Warren Buffett mainly earns from his passive income, maybe from investments, which are capped at a tax rate of 20%, but then his secretary earns mainly from his salary, which is capped at 37%, and then earned income, maybe salary, is the easiest income to get taxed. As we have seen, it makes much more sense for you to reduce your tax obligations, or maybe to reduce your tax burden, or actually legally avoid taxes, because if you never learn how to legally avoid taxes, maybe you'll never get to play the same level as the super rich, maybe the super wealthy in the world, because that's a game that they have learned how to play, how to legally avoid taxes. So if you look at our Kenyan investment environment, there are actually a lot of asset classes that you can use to maybe reduce your tax obligations, maybe legally avoid taxes. Because if you look at some asset classes like maybe infrastructure bonds, they're tax-free, euro bonds, they are tax-free. If you look at dividends from both circles and from the stock market, they're only subjected to a 5% withholding tax. Capital gains are subjected to only a 15% withholding tax. Or even normal bonds, or what you call fixed coupon bonds, they are subjected to only a withholding tax of between 10 to 15%. Money market funds are subjected to only a withholding tax of 15%. So compare that with what we pay as our normal tax rates, which is between 25 to 35%, depending on the income level. That means the only way you can actually get to actually reduce your tax obligations or your tax burden is to get yourself earning more from your investments than you do actually earn from your active income. So this can only be done by saving a part of your income and then constantly investing in income producing assets, whether it's in the stock market, whether it's in bonds, or whatever other asset classes that you may invest in, because at the end of the day, your earned income will always be subjected to a higher tax rate if that's your salary than maybe the income that you get from your investments. So I hope this has acted as an eye-opener that maybe the biggest expense that should always be looking at reducing is your tax expense. Yes, you can worry about the inflation rate, the currency depreciation, maybe you can worry about what your annual return on investment is, but then if you don't actually learn how to legally avoid taxes and reduce your tax burdens, then that's the biggest expense and that's the biggest threat to your money. So if you don't learn how to manage and reduce that obligation, then you will never maybe play the elite game that maybe the super wealthy or the super rich are playing. So let me know what you think about taxes, and let me know what you think about the billionaires and the super rich and the super wealthy legally avoiding taxes, and how they have been able to actually beat the trap whereby governments have been trying to impose newer taxes on the wealthy to maybe make the playground even, but then the super wealthy always find ways to actually still avoid taxes and do it legally. So that's it on this video. See you on the next one.